Good morning and welcome to our earnings season special today on Thursday. And it's, we've had ASOS this morning. That's probably the big one that we're looking at in the UK. And then later on today, it's the turn of Intel, the chip maker, which has had something of a rocky, a bit of a rocky ride through 2019. The shares selling off sharply in the first few months and then rebounding firmly. Coming up into these Q4 earnings, they're due later after the close in the US. Consensus EPS seen at $1.23, that would be down nearly 4% year on year, and consensus revenue estimate is $19.23 billion, which would be a 3% gain year over year. So sort of tracking the kind of broad market in the sense that so far the S&P 500, we've seen revenues up around the 2% level and earnings per share, profits essentially down by around 2%. So Intel's had its problems. It's been faced with the rise of AMD. We've seen some big moves in the share price last year. I'm just going to quote Bernstein analyst Stacy Raskin, who issued a note recently. You can catch these in the analyst recommendations. You can catch what the analysts are saying there. The question is whether the company can keep riding this momentum as this year progresses. So we saw good momentum towards the back end of last year, but can this continue? There's concerns about PC demand in particular falling off following a sort of recent corporate refresh, as well as whether Intel can make the right tactical moves in response to its CPU shortages and AMD's ascent. Stacey goes on to say that the company's supply constraints don't seem to be letting up, and customers are getting infuriated and therefore being sort of pushed to AMD. So we are looking at those numbers and we do expect, I think we're also expecting projected 2020 revenue of $72.4 billion and that would be earnings of $4.66. So look ahead for the guidance. It's obviously the chip makers these days are an important leading indicator as well of the health of the economy, the global economy, the US economy. So these are important bellwethers these days to look out for how the global economy is doing. So it's important to watch those numbers as they come out. And then meanwhile, we've had ASOS reporting today. Its revenues are up 20%. It's reported sales in excess of £1 billion. So it's doing very well against a very tough backdrop for UK retail. It's obviously got strong sales globally as well in the US, rest of the world, and so on. But for UK retail, it's doing exceptionally well and seems to be bucking the trend that we've seen elsewhere. So ASOS doing very well. Gross margins were down 170 basis points due to US duty and investment in customer acquisition. So it's making good progress, and its outlook for the year, for full year 2020, remains unchanged. But we weren't expecting any significant change anyway, given that it's only the start of the year. So decent progress from ASOS. Shares actually opened up 10% higher, but have since fallen back and were around 2% higher last time we looked. Otherwise, the FTSE trading at 75.55 there. You can see it's tracking this sort of rising wedge in the short term. Longer term, we've got these green lines, this triangle that we're in. So we're looking to see if this yellow line breaks, and we could be starting to see further declines with trend support coming in at 7,200. So that's it for the moment. We'll have a live look at the ECB later, just to give you a quick recap on what it's saying, and then of course the usual walk on Wall Street. That's it for now. Thanks for watching.